Welcome to another update, you guys. Today is Tuesday, December 22nd, and the markets are this time of the market. Yesterday, we did a special report. Business counselor TJ was on our report, and we discussed a lot of the things that were taking place in the market. There's potential economic decline. And after doing today's research, the evidence of that has become even more clearer. Another thing I want you guys to understand, especially those of you who are members in our account management, it's very, very important to understand that when we place trades and when we give signals, the reason why we place them either on a Monday or Tuesday, some of you guys may not know this. I've said this several times before. But I always have to remember, not everyone has heard this just because I've mentioned it in previous videos. But understand this, that the data, all the information, okay, all right, so here, for example, the Forex market, it's about money, currency, buying and selling around the world, right? So we know that the Forex market closes on Friday and it reopens on Sunday, right? But that doesn't mean that everybody else in the world stops spending their money on Friday after 2 p.m. Pacific Standard Time, and then they start spending their money again on Sunday at 2 p.m. Pacific Standard Time, or whatever time it is on your side of the world whenever the Forex opens and closes. See, what I'm trying to say is this: money keeps on, transactions keep on taking place, money keeps on being spent, buying and selling keeps going on, regardless of the Forex closes or reopens at a certain time. So the reason I say that is this: all of the transactions that take place while the Forex computers are on sleep mode, all of that information, once the computer starts kicking back up again, or from around the world, the computer that processes all of the trade information, that processes all of the transactions and the data, once that kicks up again, all of that information is flooding through. All that information that was sitting there from Saturday, okay? Especially on the weekend, people spend a lot more, considering the times we're living in, of course. But on average, people tend to spend more over the weekend, especially more over the weekend than they would during the week. So now Sunday opens up, and the market data is not that clear. So then Monday comes and data's being processed as quickly as possible. Keep in mind, it's being processed while new spending is taking place. The old data from over the weekend is being processed first. So it's like it's trying to catch up with all the old data plus the present data that hasn't even been processed yet. So for you to really take a trade on a Sunday is pretty crazy to do. Crazy thing to do, number one. For you to take a trade on a Monday, you don't have all the information. You have some of the information, but not all of the information. Then to take a trade on a Tuesday, you got better information to work with. You got better data to work with to get in there. Now, sometimes you might have clear data on a Monday, depending on what's going on in the market, a lot of other different factors, but that's usually the rule of thumb. Excuse me. So, with that being said, that's one of the reasons why we don't just jump on board just because we can. You do that, you'll find yourself having to switch positions at least once or twice more than you should, especially in the middle of the week. Now, with that being said, let's go into the market and see what's going on today, Tuesday, in the Forex market, commodities market, cryptocurrencies market, indices market. Let's take a look and see what in the world is going on. Okay, so with the Forex market, guys, we finally hit the red. We're in the storm, guys, with the Forex market. Very, very stormy. I'll tell you this. One of the reasons has to do with the US dollar. I mentioned this in the other update and even previously, but the US dollar, especially this week, the US dollar is definitely gaining some strength on the uptrend, okay? We finally had a switch position today, a new trend. If you go to the bottom of this report and look at the dollar index, it finally changed, and that's been a while. So it's starting a new trend. There's a new buy trend. Now, more than likely, it's probably because of the stimulus package. Okay, so the market has finally caught up with that, seeing that it is Tuesday. All right, so the market, again, that's evidence right there how the market has its own lag or delay. All right, you got to remember, just because these are computers don't mean that they respond faster than human emotion. That's another thing that a lot of people don't realize. Computers do not respond quicker than human emotion. People will make a decision based on their emotions much more quicker than a computer would make a decision based on processes, especially if those processes take a while to compute. By the time the computer is finished computing everything, a human being will make a decision based on how they feel in a second, in less than a second. So keep that in mind. This is what we're dealing with here when we're talking about the market. That's the basic principle of it. Again, I would have to make another 1 hour video to get into that discussion, but I won't do that right now. All right, so the Forex market finally hit the storm, guys. It is stormy out in the Forex market. There aren't any clear pairs. All of the pairs that we have in our top picks are usually the pairs that we place in our account management, by the way. And if you look on the top picks at the bottom of this report, you'll notice that a lot of them are emerging. All right. A lot of the other currencies are taking a dive, but they haven't been completely confirmed. It may take another week before they're completely confirmed. Does it mean that there aren't any available pairs to trade on? No, it doesn't mean that at all. But what it does mean is that because of the storm, because of the condition of the Forex market, the trades that you will pick, according to this report, will be more volatile. Why is that, Gabriel? Why are they more volatile? Well, because of the futures market. Whenever you have two pairs going against each other, you want to pick the pairs that are opposing one another, and you have a better chance of making your profit. That's one of the reasons why we're so successful with placing the right trades, the right pairs in these accounts. Does it mean that you won't make profit with pairs that are not opposing one another? It doesn't mean that at all. It just means that you have to be slightly more careful and more aware and more cautious as to what is going on. Because why is that? There's a lot of misalignments in the market today. As of December 22nd, the market is taking if you want to talk in terms of an earthquake, definitely a big earthquake. Okay, taking a shaking. All right. So we have some here that are pretty good. You can see the fire on them. Those are the ones that count as they're pairs that are on fire. And some of them are new trends, which are pretty good. The Aussie New Zealand has been doing pretty good, but this pretty old trend. All right, 13 days old. Australian Canadian, pretty good, but again, it's 13 days old. And the reason why they're not opposing pairs, and that's because here the Australian dollar is taking a nosedive by itself. Just the Australian dollar by itself, I'm talking about when I'm talking about opposing pairs. And then the Canadian dollar by itself is taking a nosedive. We noticed that last week, actually. And it was definitely a precursor for oil prices about to drop. Definitely was an indicator. Dollar versus Canadian dollar. We saw that last week in the report. Okay. Now, I made a comment last week. I didn't see oil reflecting it. But again, that's because the market took a while for it to actually reflect. It took this week in order for it to finally reflect. Yesterday, to be more clear. Actually, today, to be clear. So the Canadian dollar, or the dollar versus the Canadian dollar, took on that change last Friday, I believe. And then the reflection of the oil prices and the Canadian dollar became much more clear. Canadian dollar became clear yesterday, but even more clear today, as well as the oil prices in the commodities market. Very clear, because oil and Canadian dollar are intrinsically linked. Okay. So, guys, we'll trade. You can trade, but just be cautious, okay? So, both of these are taking a dive, all right? And we got a lot of these pairs that are taking a dive. by themselves. So you got two sells going against each other, or two bears going against each other, is what we have here. There's only one bull in the market today, guys, believe it or not. And that's the US dollar right now. The US dollar is dominating the landscape. It's like it stands alone right now. The US dollar, and yeah, pretty much without any stress. The next one in line would be the a Bitcoin. But if we talk about a fiat currency, the US dollar by itself, that and gold and silver, if you're talking commodities, and natural gas, okay? All right. But gold and silver is definitely being affected by the movement of the dollar. Now, gold and silver, that information tends to lag as well. But you can tell with gold and silver, especially if you're buying it and it goes and you're losing a certain amount of money, then you kind of you realize, wait a minute, the information is lagging. Something is going on, and obviously that something has to do with the dollar movement. So we may see gold and silver become more clear in definition by next week. If we see gold and silver become more clear in definition by next week, then we know for sure that this dollar movement is definitely a serious dollar movement. This may be the actual movement that's going to change the CMV. We'll know that, especially if we start to see some extreme stress taking place on the CMV of the dollar index, then we'll know, whoa, the dollar looks like it's trying to pull through. But again, with some serious cautious behind it. All of these trades, there's not one trade, guys, in any market that's really clear. Even palladium, even though palladium is clear by itself as a precious metal, but I would say probably natural gas is probably the only commodity really that's super clear. Palladium would be second, but because palladium is connected to the dollar, you also got some issues there, only because it's relation to the dollar. So technically, everything is unstable and everything is volatile. And it's true what the volatility index is showing, that everything is volatile. So in other words, trade at your own risk. I would suggest maybe trading half of what you normally would trade. Maybe 1 to 2 lot sizes smaller than what you would normally trade as well. Definitely keep your margin level percent above, way above 1,000, maybe at 1,500, 2,000. Okay, because this is really, really some serious. Okay, we are back. I got disconnected. So we have commodities market is in the red. We have two markets right now that are in a storm so far. Forex and commodities. I already spoke about precious metals, what's going on with gold and what's going on with silver. Okay, the energies market as well, the energies as well, oil, UK oil and US oil. You guys can take a look at that and see what's going on there as well. All right, we have the cryptocurrency market. Even that market is in a storm and it's declined even further. We may see the decline of Bitcoin price may have capped at where it's at right now temporarily, because the CMV has been strong and it's still going strong. Don't see any movements in the CMV yet with Bitcoin, which would indicate a major pullback of some severe droppage. But we got some droppage that's about to come, possibly by other indicators with the other cryptocurrencies like Bitcoin Cash. Let's see, all the other ones pretty much, except for Monero. That one's moving way weird like it usually does. But Ripple and everything else, we're seeing those patterns, and Bitcoin may soon follow. Or there might be even a bounce back, because the current market value of Bitcoin is pretty strong right now, and it has been for quite some time. Okay, which if you went off of this, you would have easily known that based on our report that Bitcoin was going to reach its goal. And that was just way obvious based on the report that we had. And then finally, the indices market still very extremely stormy. So we got all these markets going through it right now around the world. Every asset, every market, just complete storm. If you want to talk about like the big one, a category 5 weather, here it is, guys. So this is a serious storm. Doesn't matter what market you go to. And then finally, I'm gonna let me see. I mentioned with the dollar, there goes the dollar. Everything here has a warning indicator on it. There is a new trend that has taken place with the dollar, according to current market movement. Nasdaq, that's trucking along, guys. Okay, it's going through some extreme stress, so you're still gonna see some of that volatility. But man, it's just some crazy movements going on. And finally, of course, the volatility of the index pretty much is telling us the whole story, the complete story, guys. There's volatility, and it looks like there's going to be some more volatility for more days to come. All right, so you can take your trades. We're still going to take trades, take the same pattern we're taking, especially on a Tuesday. Now, if anything, there's not, especially now, take your trades on a Tuesday so that you can see as clearly as possible. All right. So just real quick, let me go over the top picks to just kind of explain what's going on here. A lot of these are emerging, meaning that a new trend has formed on the current market movement perspective. Okay. And that means that according to current market movement only, we see some powerful moves. So it does say a lot. Let's see here. According to current market value, there may be some movement like on the here, not to confuse anything. So current market movement, definitely there's some straight up confirmation movement. But on current market value, there's no confirmation. That's why everything is known as emerging. Okay, it's emerging. And that's a term that's only really used to identify just the futures market. Okay, that's why they're just the currency by itself. They're not paired up. Okay, all right. Here, the second category here, these are profitable, but they're volatile. Okay, that's why there's a star. There's profit there, but also understand that there's going to be volatility because you're gonna have either like Australian, Canadian. Well, in this case, the Australian dollar is weak. It's a bear versus another bear. But in this case, the Australian dollar is going to be the stronger bear. So that's why it's a buy. Okay. All of these are bear market, guys. All of them. With the exception of probably Japanese yen. But right now, the Japanese yen is probably the only one close to the dollar right now that's somewhat strong, but it's you see what I'm saying? These are all, everything here is just volatile. That's the best way for me to describe it and explain it. So can you still make money in a volatile market? Of course you can. That's the last time I'm going to say this, guys. You most definitely can. Just be careful. And we're going to, again, travel this together. This is where this is what separates the strong, the weak from the strong. Moments like these. This is what separates the real investors from the fake ones, or the weak ones from the strong ones. Let's just say that. All right. So here we have it. And one of the reasons why you notice the Canadian, there's a lot of Canadian pairs in this list. And okay, I keep on getting knocked off here. And this is going to be the last little section here. But notice a lot of Canadian pairs here. All right. Notice the dollar pairs are the ones that are definitely overpowering the rest of these, especially if they're paired to a weaker pair like the New Zealand dollar. Australian dollar is not on here yet. I said yet. I'm pretty sure it may join this list because the Australian dollar looks like it's giving away to the US dollar. Don't have a lot of Japanese yen except for the ones that are associated with the weak currencies that are taking a dive. New Zealand dollar happens to be one of them. So is the Canadian dollar, like I mentioned before earlier in this report. So we have some pairs that are experiencing some very challenging times right now, and it's primarily for several reasons, but the only one that's kind of strong for now, but here is the U.S. dollar. But the U.S. dollar, you gotta be cautious with that because again, that's also emerging. The current market movement for the US dollar just changed today. So it's not something that's solidified and established. It isn't something that's solidified and established, especially in the current market value. If you go to the current market value of things, especially with the US dollar, you'll notice right away that the US dollar current market value is still going down. So what we're seeing right now is just the US dollar struggling against its real value. That's what the current market value means. The true, not the true value, because there is something else that I have in my strategy called true value. But the current market movement is just struggling against the market's current evaluation of the dollar. And the market's evaluation of the dollar is basically showing it as a weak currency. It's selling it off. So temporarily right now, the more present movement right now is that the dollar is being bought and is bullish, and it's pretty much the only bull right now that's dominating the whole scene right now. And of course, because they just pumped in $900 billion worth of it. They just pumped in $900 billion into the whole world, technically, because it is the world's reserve currency. So in the short term, we're going to see some movements. How short term is this short term movement going to be? I don't know, but here, right, we ride the wave. When we're making these trades, we are riding the wave. Guys, I'm going to go ahead and get off this because the update is already late because the research takes a little bit longer, especially when these types of markets happen. So I'm going to get off right now. Guys, if you have any questions, contact us, and I'll see you in the next update. Oh, also, it is holiday. Christmas is coming up, and then after that, New Year's is coming up. So just keep in mind, things are a little bit light around the business now, as far as having a lot of people to do what needs to be done because of the holidays. So keep that in mind, okay? But we're still available for you. But of course, not on Christmas or not on New Year's, okay? But after the holidays done, after the New Year's, guys, we're ready to rock and roll. All right, guys? So contact us if you have any questions, guys. All right, see you in the next update. God bless.